Did you know that by passively investing into the stock market $200 a month for 46 years, you could become a millionaire? And did you also know you can wake up tomorrow morning, trade the stock market for 30 minutes and make $100, $1,000, $10,000? It's limitless. But now begs the question, is trading better than long-term investing? That's what I'm going to answer in this video. Hi, I'm Giannino. I teach you how to make money, grow money, and invest money. So please like this video and subscribe to the channel. I would greatly appreciate it. And like I said, in this video, I'm going to be talking about the pros and the cons of long-term investing and day trading, because I have done both of those in a professional realm. I quit my job about 18 months ago to trade the stock market. Since then, I took my account from 3K to 45K all in 2 months time. I know what I'm doing when I'm day trading the market, and I also know the advantages and the disadvantages of doing so. I also invest my money long term, so I know the true potential of doing that as well. But before I get into what is better and which one you should do, I just want to point out Warren Buffett is the wealthiest investor in the world, and there's probably no day trader that has the amount of money Warren Buffett has, and he's a long-term investor. He's someone that buys value stocks and holds them for long periods of time. So if you can name someone that has more money than Warren Buffett and day trades the market, please drop me a comment below. But I think that should answer your question right away. Is day trading better than long-term investing? Warren Buffett should put that question to silence, but I'm also going to go into it a little bit more in depth and tell you what I think personally and what should be right for you. So let's get into it right now. I'm not going to waste any of your time. We're going to talk about day trading. First off, the advantages associated with it. Advantage number one is you're in and out of a trade, and it's such a great feeling, because this is why it's so awesome, because you can get into a trade and get out of a trade within 5 minutes, maybe 30 minutes, maybe 1 day or 2 days if you're trying to swing trade the market. But once you're out of that trade, your money is not at risk. So you can go to bed at night not worrying about your money and the fluctuations that are always happening in the market every day. So having liquid money is a huge advantage of day trading. I can take that money out tomorrow. I can pay my bills. I can buy a car. I can do whatever I want with my profits. So being in and out of a trade offers those unique advantages. Advantage number two is there are higher returns associated with day trading. When I am day trading the market, I can capitalize on movements that would not be capitalized on with long-term investing. Just for example, I'm going to share a picture with you on how the market could have made you 12% in just 1 week. From a 6% down move, a 3% up move, and then a 3% down move. So 12% return in 1 week sometimes takes 2 to maybe even 5 years long-term investing. So to get those returns long-term, it's kind of hard and it takes a while, but you can do this very quickly with day trading, and that's why it's so appealing to everybody. And with my premium group, we trade options. So a 12% move, if we leverage that with options, could be 600% to 1,000%. So not only can you capitalize on moves you wouldn't be able to capitalize on with long-term investing, but you can leverage those moves to make some insane percentages that could really add up in 1 week to maybe even 1 month. And if you want to trade with my premium group for 7 days for free, click the link in the bio. But now I'm going to talk about the disadvantages associated with day trading. So one huge disadvantage is it's full time. You're getting yourself into another job. So you're probably trying to quit your job to be financially free, but you're going to find yourself in a completely new job when you're going to be day trading. Let me just give you a sneak peek on what your day looks like when you're a day trader. So before the market even opens, that could be 5 a.m. for some people, 6 a.m., depending on what time zone you're in. You're going to have to plan your charts, plan your trades. Sometimes that happens the night before. During that time, you're going to have to look at the pre-market action to see how that's going to affect your charts. And then once the market opens, you have to decide what you want to get into and what you want to trade, and then you execute it. And then you have to follow your rules and make sure you're not subjecting yourself to too much risk when you're in a certain trade. And then that could take all day. You could be in a trade all day. That could be from 7:30 till 2 p.m. Mountain Standard Time. So that, in that case, is a full-time job. When the market closes, a lot of great traders read financial statements, they read the news, and they study the charts, Yet again, they also look at how they performed in that day and see what they could have done better. This is what it takes to be a successful day trader. Obviously, you can wing it, have some good returns for 1 week, maybe even 1 month, sometimes even a year if you get lucky, but then you're going to have that one bad day that wipes out everything, and it's all because you didn't treat this like a job and you didn't make this a priority. So although the returns are better, the time it takes to get those returns consistently can take a ton of hard work. So now we're going to go on to disadvantage number 2. This is the risk associated with day trading. It's much higher than long-term investing because you have this one factor that affects you every day when you wake up. It's called you and your emotions, because any day when you act on a certain emotion that doesn't follow your plans or your trading rules, you could take your account straight to zero, you could lose 50%. So every day you are the risk. If you can't control yourself, you're not going to be great. That is the one huge risk everyone doesn't analyze when they get into this. And disadvantage number 3 is you have to time the market. Like I said before, you could have made 12% trading the last week with the SPY, but with that 6% down move, you had to nail the bottom to make that 3% up move, and then you had to nail the top to be able to profit from that 3% down move. So knowing those levels is super hard, and being able to time them is the problem with day trading. You just never know what the market's gonna do. So when you wake up every day not knowing what the market's gonna do, you can see why this is super hard for people to do and be successful doing. Now I'm going to talk about long-term investing, the advantages and disadvantages associated with it. And I just want to point out, I'm not talking about picking stocks like a pro, trying to buy Apple at $4 and having huge returns. All I'm talking about is passive index investing. So just buying the index month after month and just getting those small returns. This is one of the best long-term investing strategies, and this is the one I'm discussing today. So the advantage of doing this is completely passive. So when you're buying the index month after month, year after year, you're having your money work for you literally when you're sleeping and not thinking about it. So unlike day trading, it's not a full-time job. Once the money goes in the market, it's done. You don't have to think about it again. And in some cases, it pays you if you buy a dividend stock. So not only is it working for you to grow, it's working for you and paying you consistently. Advantage number 2 is it's low risk. I'm not a financial advisor. This isn't financial advice. But when you invest in the indexes over long periods of time, all you're saying is you're investing in the US economy. So if the indexes don't do well, the US economy won't do well. So if you don't believe in the index, you probably shouldn't be living in America. The reason the index is so low risk is because it holds a bunch of stocks and you're not subjected to one stock going bankrupt, and you also get the gains of the overall economy over long periods of time. And the other reason it's low risk is because you're holding it for long periods of time, and like I said, if you just believe in the American economy, that's going to go up for 30, 40 years and you're going to have some pretty good gains. Now let's talk about the disadvantages associated with long-term investing. So disadvantage number 1 is it's not liquid money. This is money you're putting away for 30 or 40 years. So once you put it in the market, you might as well say goodbye to it because you're not going to see it for a long time. And if you end up taking it out too early, you're going to subject yourself to taxes, which really stink. And you're also going to subject yourself to lower gains long term, and you're going to see a smaller retirement account when you retire. And the last disadvantage of long-term investing is you're going to see lower returns compared to day trading. So obviously, like I said, you can make 12% in 1 week day trading. 12% might take you 2 to 5 years long-term investing. But there's always that possibility of increasing those returns with leverage. You can use margin or option trading long-term and hold those options as far as you can. In that case, you could produce higher returns from long-term investing, but that isn't the core strategy I'm trying to teach you. Let me give you one example. So the SPY in the 11-year bull market ran for 300%. Just last week alone, my premium group was trading Beyond Meat options, and in 1 hour, those options ran for 600%. So 11 years, 300%. 1 hour 600%. So you can definitely see the appeal for day trading over long-term investing, but the risk is so much higher. So lastly, I'm gonna wrap up this video with what is the best thing to do long-term. And obviously you can do both. That is probably one of the best things I could suggest. You could try long-term investing and day trading, but I would suggest most people working a full-time job just stick to long-term investing, because that is where they're going to make their money work for them and pay them while they're sleeping. You don't want a full-time job added to your full-time job. You want to have money working for you. As you get older in life, you have less and less time. You don't want to pick up things that take up your time. You want to have things that pay you and don't take up your time. You want to have things that grow your money and pay you and don't take up your time. And long-term investing is one of the best ways to do that. So that is my number one suggestion in this video. If you want to watch another video on how to turn $100 into $1,000 in the stock market, please watch the video to the right of me. I think you're going to love it. In this video, I want to tell you the story of how I turned my trading account from $3,000 all the way up to $45,000, primarily using options. This is all I got. Matt signing off. Peace.